Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. Welcome to Bazaar Morning Call. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I am Reema, and with me is Mangalam Malu. And Indian markets and global markets will be back in action after a Christmas holiday. But before anything, once again, wishing all our viewers a very Merry Christmas and season's greetings.
Season's greetings indeed, Reema. And back in action, I'm not too sure whether it'll be entirely back in action or not. Because on Christmas Day, obviously, the volumes were 50% lower than what we've seen on an average. But even the day before Christmas, the volumes were 40% lower on an average. And perhaps today, because it's a Friday and ahead of, a weekend coming in, the trade might not be as exciting in terms of volumes, etc. But let's see. We got Boxing Day to go ahead.
Indeed. So maybe prepare ourselves for a bit of a range, low volatility, holiday thin trade. But let's begin the show then with the top global cues then. So Wall Street delivered a positive finish in a shortened Christmas Eve session on December 24th. The S&P 500 and the Dow Jones both closed at record highs. The Dow surged about 0.6%, a gain of about 300 odd points. The S&P 500 was up 0.3%, while the Nasdaq rose about 0.2%. The S&P 500 is now up a solid 18% this year, and this marks the third straight year of strong gains for the S&P 500. Remember, US markets, in fact, global markets were shut yesterday on the back of Christmas, so no major overnight developments, and several key markets, including Australia, Hong Kong, and most of Europe, so whether it's UK, Germany, France, will be shut today on account of Boxing Day holidays. So basically, in a nutshell, expect holiday-thin liquidity across the board, which could keep the volatility low and trading range-bound. But the big breaking news that's coming through, although trade may be on the lighter side, it's never dull when there's President Trump. So President Donald Trump just posted on Truth Social announcing U.S. military strikes against ISIS targets in northwest Nigeria. And I'm reading out the post that he put on Truth Social. Tonight, at my direction as Commander-in-Chief, the United States launched a powerful and deadly strike against ISIS terrorist scum in northwest Nigeria, who have been targeting and viciously killing primarily innocent Christians at levels not seen in many years and even centuries. I have previously warned these terrorists that if they do not stop the slaughtering of Christians, there would be hell to pay, and tonight there was. May God bless our military, and Merry Christmas to all, including the dead terrorists, of which we will have many more if the slaughtering of Christians continue. We'll get more updates on this breaking story as we go ahead, but keep your eye on commodity prices. And gold and silver separately are taking a bit of a breather after their record-breaking surge. So spot gold prices are down close to about 0.4%, settling around that 4,500 mark. But it had topped the $4,500 an ounce. I think the level was $4,525 earlier this week. Now, getting back to the trading action on Wednesday, it was a bit of a subdued session. Markets had opened up flat, gained a bit in the first half of the trading, but ultimately ended at the day's low, below 26,150. But despite the range-bound trade, the Nifty continued to make higher highs and higher lows, as you can see on the charts, and that grid will come up for you on your screen. What to watch in terms of a support? It's the 20-day moving average, 26,115. And if that holds, maybe the bullish bias stays, and maybe we can make a dash towards our all-time high levels of 26,325. On flows, foreign institutional investors extended their selling streak in the cash market for the third consecutive day. So yesterday, you had selling of 1,721 crore, but this is the third consecutive sell figure. But the DIIs countered it with buying of 2,400. But that's at the net level. At the gross level, volumes have thinned out drastically, as Mangalam was pointing out, 40-50% lower than the average levels. Now, what to watch today? We'll get to the big stocks and news, but Coforge board meeting on a potential fundraise. The analyst meet is scheduled at 5:30, so we should get the announcement in daytime. Indian Railway implements the fare hike effective today for long distance and premium services like Rajdhani, and Indigo will be rolling out passenger compensation rules from tomorrow following the large-scale flight disruption. So that's what's on the tap today. What are you watching on the F&O side? Last 2 days, we had the expiry on Tuesday and Wednesday. And today is kind of that sandwich session, right, between two holidays.
And the next couple of days, we have the other expiry as well, which is the monthly expiry on the NSE on Tuesday. That's what happens. But if you look at, today, the sandwich session on Boxing Day, the GIFT Nifty indicates a slightly lower start. That comes up for you on the screen as well. The question is whether we see support at lower levels or not, largely because it opens at important support levels. Where does it open? Closer to the low on Wednesday. Nifty has been fairly range-bound and volatile on Wednesday. Did, look at highs of around 26,250 thereabouts, and lows were maintained around that 26,100 odd mark itself. The Nifty Bank's inability to cross past and close above the 20-day moving average is something that has the bulls slightly worried. So this is something that we will monitor very closely as we move towards the trading session. The advanced decline ratio as well. We started with 1,700 stocks in the green and ended with 1,700 stocks in the red. So that would, keep portfolios feel more red than green. And that is another trend that we will monitor as we move towards the end of the year. The cash market flows, as you pointed out, the FI is selling about 1,700 crores in the cash market. But remember, the gross volumes from the FIIs were about 52% lower than what we've seen in December. And December, by and large, is lower than what we see in the, the full part of the year. And trade on thin volumes likely to continue today as well. And that means that there could be high impact costs, big moves on very low volumes. FIIs and index futures too. While the short covering continues, they bought about 1,000 crores. On Wednesday's trading session, they unwound a few longs as well. So while, the net contracts, the shorts reduced to 1.29 lakh from 1.58 lakh, the long exposure still stands at around 12%. So any sustained move above that 26,300 thereabouts could lead to a further short covering up move. All of that rests on whether the Nifty holds on to the 20-day moving average or not, and all data indicates that it will perhaps hold that 26,100 to 26,000 sort of mark. And that's what the option writers are playing for as well. 26,000 put, a fair amount of writing. 26,100 put, an equal amount of writing on that one as well. And then you've seen some writing at the 26,200 call and the 26,250 call. What does all of this action mean? Well, option writers are expecting the Nifty range to be between 26,000 at the lower end to 26,300 at the upper end. The key to track now, in absence of big institutional volumes coming in from the FIIs, are the mid and small caps. They've been underperforming. Can we see a relative outperformance on the mid and small caps? And typically, on thin trade, you have a lot of these high beta names like PSUs, rail and defense stocks. They keep buzzing a lot more. We saw glimpses of that on Wednesday. Does that continue today as well or not? And all the way to the end of the year, because of NAV propping and low volume up moves that we see on all these high beta names, is something that I'll be tracking very, very closely.
Thank you very much for that. And I think the biggest disappointment of 2025 was the lack of the US-India trade deal, despite the early start at the beginning of the year. But there has been a significant development, positive diplomatic development as we go into the new year. So India's ambassador to the United States, Vinay Quatra, has met US envoy to India, Sergio Gore, at Mar-a-Lago to discuss strengthening bilateral ties. The talks have focused on expanding trade relations and the future of the India-US partnership. Sharing details on social media, Quatra said the discussions covered shared goals on trade as well as Gore's priorities as he prepares to take charge as the US ambassador to India. The meeting comes as New Delhi and Washington continue efforts to boost cooperation across trade, investment, strategic sectors, and evolving global challenges. So while we wait for the India-US trade deal, the efforts are underway to boost cooperation between India and Washington. So generally, a positive sign for bilateral conversations. But on the tariff issue, we have Stephen Okun, the CEO of APAC Advisor, who told CNBC that US midterms are likely to push President Donald Trump to lower tariffs and that a trade deal with India and China will happen in early 2026. Listen in.
He is going to get pressure from the Republicans in the House as well. And so is India going to win the midterms for the administration? Of course not. Yeah. But it's just every little bit that's going to count. And sure, if you look at the textiles and the things that people buy every day, clothing that they buy every day, that's going to be a difference. China's going to be, of course, the biggest difference of all. And that's where I think you look to see the biggest trade deal, not a reset, but you are going to likely see a trade deal between the U.S. and China and between the U.S. and India in 2026. And I think sooner in the year, because you have to let that run through pricing to get that help in the midterms.
Right, interesting commentary coming in. Let's get in, Prashant Baroda, portfolio manager at Allspring Global Investments on the show. Prashant, season's greetings to you. A holiday-thin session, holiday-thin period as well, but not short of any news. What do you make of the lack of clarity on India-US trade deal? I mean, it's like waiting for Godot.
Yeah, we've been waiting whole year, right? So I think from US and India perspective, right now it's not at the front stage because US is working on something on Russia and Ukraine. And my sense is if that Russia and Ukraine happens, whether it's first quarter or second quarter deal happens, automatically tariffs will go down from 50 to 25 for us. And then it comes to then maybe they'll work and get to closer to 20. So my sense is that India is probably going to be a beneficiary of the headlines on any Russia and Ukraine deal.
Got that. Prashant, hi. Morning. Rima here. So record highs for the US markets. It's the third consecutive year of gains for the S&P 500. So when you are starting off a new year, 2026, with these gains in the backyard, what will typically happen? Because in the past, if there is a prolonged bull run, then the gains will continue. Markets stay resilient. But if we are closer to the top end after 3 years of a good run, then you do see some mean reversion, some profit booking correction set in. So what, according to you, is going to be, do you think the S&P 500, for instance, will have a positive close in 2026? Will we see some more gains?
Yeah, I think you have to take into mind 2026 is also election year, midterm elections in the US. And the US economy is tied a lot to how, equities and global markets are doing. So I continue to see kind of sustained earnings growth, and maybe we're looking at the 20s being sort of the roaring 20s post the 22 correction. So I do see sustained growth, and I think the catalyst for a lot of these AI names will be whether OpenAI can raise $80 to $100 billion in the first half of next year. And if that happens, I do see continued sustained performance.
Right. What are your thoughts on emerging markets at large? Because increasingly the clamor for emerging markets, particularly the non-Indian ones, is increasing because people are looking at alternatives, and China offers decent value, also AI play. At the same time, a lot of money is moving from India to China. Do you think that will continue into 2026?
China, I think, will continue to do well. I think India will also do well. So in the last few years, it's been like in 2024, India had a great year, and 2023 as well, where China was suffering. It kind of reversed a bit in 2025. I see them growing in lockstep from here on. I think a lot of the frothiness in Indian valuations is coming off, and the government has done good reforms with GST implementation. So I think autos sales will continue to do well from that perspective. So the Indian economy will do well and grow at its own speed. And I think China and Korea will also benefit from the AI trade along with Taiwan as well. So emerging market as a whole looks very good going into next year.
What is your weightage of India in the emerging market Allspring's portfolio? In fact, if you could give us the weightage of all the emerging markets.
Yeah, we're slightly overweight in India versus the benchmark. So we've, the Indian market has moved from 2024 to 2025 into from buy at any price to buy at reasonable valuations as well. So we've been overweight sectors which have very reasonable valuations and where we sort of see earnings growth trajectory. We are overweight in the financial space as well in India. And when it comes to the overall EM, we're slightly underweight China, but we don't have any exposure to financials in China. But we are overweight the AI sector within China, and we are overweight Taiwan, Korea as well.
Taiwan and Korea.
Taiwan, we are slightly underweight because the biggest weight, we are overweight TSMC, but we are underweight some other sectors within Taiwan. But Korea, we are definitely overweight. We see the memory plays continuing to do well. And actually, the interesting point today is I heard some news that Apple, which used to go in and just dictate, at what price they'll buy with all these manufacturers, is seeing a lot of pushback given this AI boom, and it's affecting a lot of prices on that front too. So I see continued momentum in a lot of these memory plays going into next year.
All right. And do you have any projections on how you expect earnings to compound in India over the next few years? Because, that's the one missing piece in our puzzle.
Yes. And I think...
Go ahead.
Can you hear me?
Yeah. Go ahead.
Yeah. So from our perspective, India, I think, should continue to compound. Some sectors will compound at decent kind of mid-teens growth rate, and other sectors such as IT and sort of globally exposed pharma names are still a little challenging within India. So I think if you continue to stay in sort of companies that continue to compound at sort of higher teen rate, you'll get that valuation fill up as well. But we continue to be underweight sort of Indian IT and Indian globally exposed pharma players for now.
Would you look to increase your weightage further on India? Because you've sounded positive and you have been positive on India over the last couple of months when we've been interacting. I understand that the metric for investment has changed. As you said, buy at any level, any valuation, to buy at a reasonable level and valuation. But from here on, you're slightly overweight India versus the benchmark. Would you look to further increase it?
Yes, I think it is actually what has happened over the last years. Our India portfolio has done really well versus the benchmark. So, some of the names have done much better than the overall benchmark. So we see continued kind of momentum in a lot of these names, and we continue to kind of benefit from them. And we'll take advantage of sort of valuation premium that if some of the names get to rotate into other names which are more subdued, but where we see earnings trajectory maybe on an 18-month perspective. So I think India is going to be a very selective market. You can't buy the entire index. You have to kind of play in pockets, whether it's financials or autos, where you see sort of earnings growth trajectory.
All right, financials and autos, that's what you like, and you stay away from global-facing names. Thanks a lot, Prashant, for joining in and giving us your outlook for 2026, your view on India and the whole host of other global markets as well, playing China via the AI and TSMC theme. Wish you good luck, your team a very happy new year as well, and season's greetings once again.
Same to both of you as well.
All right, Prashant. See you again in 2026. But let's tell you, until then, what are the interactions that are lined up on the show today? Coming up at 8:35, the management of SJS Enterprises to discuss the company's new tech license and supply agreement with a Hong Kong-based company. 9 a.m., Praveen Sahai joins in for an outlook on the consumer durable space. At 9:20, Mihir Vora of Trust Mutual Fund be our market master for the day. Following that, we have the management of Hoodco. They'll be chatting with us at 9:45 on their second half of FY26 outlook. And towards the end of the show, we will be speaking with HDFC Bank's Sakshi Gupta and Union Bank of India's Kanika Pasricha on the India macroeconomic outlook. Stay tuned. Right, we take a short break, but before we do that, we will talk about all the specific stocks. We'll get to that in just a bit in our special Top 10 segment. We're looking at VIP Industries, KNR Constructions, Adani End, Ola Electric, Vikran Engineering, all of them on our radar on the back of positive news flow. On the back of negative news flow may perhaps be Castrol India, IEX, Coforge, IndusInd Bank and Strides Pharma. Welcome back. You're watching us here on Bazaar Morning Call on CNBC-TV18. On this Boxing Day, the GIFT Nifty indicates that there might be a slight punch to the bull. 62 points on the way down. Let's see whether we open closer to the 20-day moving average and see some support out there or not. But a lot of individual stocks on our radar, and our team is here with us on the stocks that will be in the news this morning. First up, we have Castrol. A big move is what we saw on Friday. And post-market close, there were details on the open offer that came by. Sonal joins in.
Good morning, Manglam. Well, we might not see the same reaction today because finally we have the open offer price. First, the details. There is an open offer from Motion JV Co, Stone Peak and CPP Investment Board to acquire 26% stake in the Castrol India listed entity. They will be buying 25.71 crore shares at 194.04 rupees a share. This price is just at 2.5% premium to what we saw as Wednesday's closing market price. So looks like the reaction won't be as positive as we saw in Wednesday's trading session. Now, interestingly, if we talk about Stone Peak, which will be acquiring 65% stake in Castrol Global, that company has delisted all the recent acquisitions which it made. In 2025, it was Air Transport Services Group. In 2024, it was Acumen Inc. In 2022, it was TK LNG Partners. All of them after acquisition were delisted. So we'll watch out for details for Castrol India as well. For now, the offer price or the open offer price is just at 2.5% premium. So expect a muted reaction to Castrol India stock today.
Indeed, and it's not that the stock has done phenomenally well. In 2025, stock is down 4%, and now the premium also is not very significant. Thank you for explaining that. But VIP?
VIP, a big move is what we saw on Wednesday's trading session, and that continues even now, because now the street is betting on the completion of this deal and perhaps a turnaround coming in. Over the last 5 years, the stock has done virtually nothing. If you discount the 12% gain that we've seen on Wednesday's trading session, then the stock is virtually flat. 5 years ago, it was close to around 350 rupees, now at 408 rupees, most of the gains seen on Wednesday. Promoters, have sold to multiples. And, the deal is complete. Now the promoters own 20%, but 32% has been transferred. Multiples PE bought 2.65 crore shares. Samvibhag Securities, which is basically an entity of Akash Bansali, bought another 1 crore shares, both of them at the price of 388 rupees. Who were the sellers? The promoters. Piramal Vibhuti Investments at around 145 lakh shares or 1.45 crore shares. And we had DGP Securities, which sold another 1.4 crore shares at 388 rupees. The key to track now, multiples growth turnaround plan for the company. What is it that they do? How much do they invest? And can they withstand the competition? And, the kind of growth runway that Safari has gotten much ahead of VIP.
Got that? So that's a stock you should have on your radar. IEX is another. Vivek is here to tell us more.
Well, that's right. So IEX, expect the stock to be under a bit of pressure today. Economic Times has reported that, market regulator CERC is actually evaluating a revision in transaction fees charged by power exchanges in India. CERC is actually considering a lower uniform fee of rupees 1.5 paise per kilowatt hour on each side, that is both the buying and selling side, for most of the transactions. Remember, currently the exchanges charge 2 paise per kilowatt hour on each side. So from 4 paise per kilowatt hour for a transaction, it could drop down possibly to 3 paise per kilowatt hour. Not only that, for longer duration contracts, they're actually looking to further reduce the fees to 1.25 paise per kilowatt hour. Discussions are currently at a preliminary stage. No final decision has been taken yet. We've reached out to IEX, awaiting a response from them. But prima facie, if this does fructify, it could be negative as far as IEX is concerned.
All right, negative as far as IEX is concerned, down about 2% on Wednesday as well. But Rima, Coforge, the big fundraise news that may perhaps come during market hours today itself.
It may not. 5:30 p.m. is the analyst call, so the Coforge announcement will come prior to that. Now, the stock has been under pressure ever since the company intimated the board that they will meet today for a fundraise announcement. In the last 3 days, stock is down 7%. The news, board meet today to consider a fundraise via a pref or a QIP. Analysts meet 5:30 p.m. Now, what the street fears is that this fundraise is going to be likely for an acquisition. The last fundraise happened in May of 2024, where the company raised money via a QIP to fund the Cigniti acquisition. After that, they did some acquisitions, but they were smaller in size. They were tuck-in acquisitions, which did not require incremental fundraise. What does a fundraise mean for Coforge? One, equity dilution, and two, a risk to cash flow discipline. Because in the past, compared to peers, the street was concerned that companies' free cash flow generation was not at par. Free cash flow to PAT, it was not at par. So the stock, the street didn't like that. And then the company course corrected. So is there going to be a risk to the FCF, free cash flow generation, and the conversion? So that's the risk, which is why the street is worried. But again, we'll wait for the details. All
right. So that's about Coforge. Vivek, monetization for KNR construction, that's positive?
Well, absolutely. Monetization, largely along expected lines, given most of the companies that do go ahead and develop HAM projects are now looking at monetizing them because these are yield construction assets and they try and sell it to InvITs. Along similar lines, KNR Construction has executed an SPA, a share purchase agreement with Indus Infra Trust to sell 100% shareholding in 4 of the HAM projects. Both equity as well as debt will be sold to the buyer. Now, what is positive about this particular deal? KNR will receive close to 1,543 crore rupees, which includes 145 crore of surplus cash. The equity investment in the HAM projects that the KNR had done was just around 567 crore. So this pegs the valuation at close to 2.7 times price to book, favorable when you're comparing it to past transactions in the same space, which have actually been under 2 times price to book. So positive in terms of valuation. The stock has been pricing it recently as well. A deal is expected to be completed by 30th September. And also remember, Indus Infra Trust too, the publicly listed InvIT as far as this particular deal is concerned. KNR Construction, positive, but it'll be interesting to see whether post the deal also the stock manages to move higher.
All right. Thanks a lot for that, Vivek. Let's get in Ria with all the other stocks which are making the news this morning. Ria.
Well, good morning, Manglam. Let's start off with IndusInd Bank. This stock is expected to open in the red today. They have received a letter from the SFIO, which is the Serious Fraud Investigation Office, on the 23rd of December for an investigation. The company is seeking relevant information regarding excuse me, an ongoing probe in the company. Now matters relating to the accounting of internal derivatives trade, certain unsubstantiated balances in other accounts as well as other liabilities were reported to the SFIO on the 2nd of June of this year. And now an investigation has been launched for accounting lapses in the derivatives portfolio, which has a financial implication of roughly 1,960 crores to the bank. So the stock is expected to open in the red on the back of this. Moving on to Adani Enterprises, though, positive news flow for this one. The Navi Mumbai International Airport has commenced operations with arrival and departure of its first scheduled passenger flights, and with day one seeing around 48 flights connecting 9 domestic destinations. Now, in terms of the capacity in its initial phase, the airport will be able to handle roughly 20 million passengers and 0.5 million metric ton of cargo per annum, and at its peak capacity they will be able to handle 90 million passengers and 3.2 million metric ton of cargo per annum. For Ola Electric, positive news flow on this one as well. They have received a sanction order for rupees 367 crore PLI auto scheme incentive payment for FY25. And the last stock which will be in focus is Strides Pharma. The US FDA has issued Form 483 with 4 observations at the company's facility in the US for an investigation that was conducted in the month of December.
Thank you very much for that. Back to Vivek on Vikran Engineering. Vivek, another order win?
Well, the slew of order wins for Vikrant Engineering to close off the year is quite strong. Over 2,000 crores worth of order received on 23rd. Yesterday, too, the company has given an update to the exchanges. They have received a large 450 crore order from NTPC Renewable Energy Project. This is for a 400 megawatt solar power project in Chitrakoot in the state of Uttar Pradesh. End of Q2 order book was 4,000 crore, a little over 4,000 crore. Now with these two orders, almost 6,500 crore. So strong going, good going as far as Vikrant is concerned.
Thank you very much for that. And also keep your eye on defense names, because the Defense Acquisition Council will be holding a meeting today. And this will be the last one for 2025. Will we get any sort of announcements, MOUs, kind of deals or, order wins? So defense stocks should be on your radar. Let's do a quick recap then of the top stocks. Stocks with positive news flow are VIP, KNR Construction, Adani Enterprises, Ola Electric, Vikrant Engineering. Stocks with negative news flow are Castrol India, IEX, Coforge, IndusInd Bank and Strides Pharma. Get into a break. On the other side, we'll invite the management of SJS Enterprises on the back of their new deal wins and partnerships. Stay tuned. Welcome back. Let's invite SJS Enterprises, the first management on the show today. Now, this is a company which makes decorative parts for automobiles and consumer appliances. So, for instance, they make 3D badges, the aluminium badges that you see for branding on vehicles, the stickers on cars, which are called exterior decals. Now, recently, the company signed a technology license and supply agreement with Hong Kong-based BOE Varitronics for a period of 5 years to manufacture automotive display systems for four-wheelers within India. Sanjay Thapar, Executive Director, Group CEO at SJS Enterprises, is now with us on the show. Good morning, Sanjay. I'm Rima, and season's greetings to you and everyone at the company.
Good morning, Rima. Same to you and everyone at the studio.
Thank you for joining in. Now, this automotive smart display market is growing very rapidly. In all our cars, we have larger screens, infotainments, digital cockpits, etc. So is this a new vertical for you? Can you explain this partnership that you have with Varitronics? What will be the expected revenue, by when? And how much do you have to share with Varitronics for this technology license?
SGS is, as you know, aesthetics, a decorative aesthetics company. And we've expanded into cockpit components. So we used to make clusters. And these clusters are now becoming digital across the auto chain. And what we have, what we see for the future really is that these modern vehicles have digital cockpits. And with this TLA, what we are doing is bringing one of the world's largest display manufacturers, which is BOE. And we are joining hand with them. SJS is a leading player in the automotive aesthetic components. And we will locally produce these displays for a more resilient supply chain for the end customer. So that's what we bring, world-class technology, localized in India, which will reduce imports and will add to the import substitution.
Can't hear you very well, Sanjay. I think we need to try.
Yeah, the audio is getting muffled a little bit. Maybe you want to speak up a little. You want to try speaking up?
Let me try again.
Yes, go ahead.
So what we will do here is localize these advanced displays that BOE supplies. So BOE is one of the largest manufacturers of display systems in the world. And SGS has very strong, deep relationship with customers and local manufacturing experience. So both these combined would deliver to Indian customers advanced display technologies at localized in India. Which will help with import substitution. Currently, most of the displays get imported into India, and we hope to be one of the early starters in this business in India.
Two-part question here. What is the kind of revenue that comes in from the Indian markets from this particular product. What are the realizations here? How do you plan to expand it? Would you reduce costs for all the Indian players here? And what's the kind of money that you have to share with those guys? So one is on the opportunity size, and the second is, the money that you will be sharing with them.
This is a technology license agreement, so not a joint venture. So we will not share any money with them. So we will get know-how, we will produce. The investment is done by SGS currently. As we go along, I would imagine that this would fructify or change into a JV. So at the moment, it is purely SGS investment, supported very strongly by BOE, who will send their technicians, engineers to help develop that capability here. As you know, these modern vehicles are now becoming more and more about a digital experience on the cockpit. So you have the display system, you have the touch functionality, and the user experience, in fact, is defined by the display. So we hope to bring that next level of enhanced user experience to customers in India through this collaboration.
Sanjay, when will you start manufacturing these advanced display systems, locally in India? Is it FY27, FY28? How many units, or what will be the overall production and therefore the revenues that you will generate?
So the plant is ready. We have a leased facility which is available. Equipment is on order. We should, by FY27, we should have the plant and equipment ready, and FY28 is when we will see revenues coming out of this. The automotive center stack display system market currently is estimated to be about 1,500 crores, which could grow up to 5,000, 6,000 crores by FY2030. So we have, it's too early to say what revenues will come out of this, but we are in that direction where we will hope to be one of the early beneficiaries of localization in India.
What about margins? Because you've enjoyed margins of 27, 28%. Will this be higher margins?
To begin with, the components will be imported and we'll assemble them. But our plans are to localize the cover glass and the backlight unit with the support of BOE, and that should help improve margins. Directionally, we look at high margin businesses, and as we go along, we understand this business better. We will try and enhance this to be directionally in that margin bracket that we normally operate. But this would not, this is a very high value item. So I don't imagine that this would be at that same margin that we currently earn, but gradually we will get there. We have quite a strong track record in terms of enhancing margins to operational efficiencies, and we hope to bring that to this venture as well.
Okay, just one more question. You said FY28 revenues will materialize. Can you give us an indication of what could be the revenues in FY28, FY29? Do you have any early orders that you've signed with? And what will be the total production at your end?
We will build capacity to, in the first phase, we build capacity to make 200,000 displays a year. And I will not be able to share with you details of the customers that we are engaging with, but we are in advanced stage of negotiation with key customers in India.
All right. And since we have you with us, beyond the autos, I remember two growth drivers for you. One, you said that you are looking at building your presence in the consumer space, which accounts for about 20% of your revenues right now. And the other one was exports, which you currently about 1/10 of your revenue. You expect it to grow much faster than your overall business. Where are you on both those counts, and what are your updated targets for the same?
We are performing well. So last 2 quarters, we won some very significant businesses across the world, Latin America, North America, Europe. We started supplies last quarter to these customers. These are very large wins. So even in the consumer business, we won businesses for a very key client in North America, where we are the sole suppliers for an overlay that we supply, which is a human machine interface part that goes on washing machines. Automotive nameplates are a big business for us. So these large acquisitions that I said, we own the branding for a very large brand, a North American brand across the world. And we hope to repeat that with others. So in terms of guidance, what I've guided is FY28 of our consolidated revenue, I imagine 40 to 15% coming from exports.
Okay. Any new customers that you've added? Because I remember when you added Hero MotoCorp, there was a big jump in your revenues. And when you added Nissan in your exports, there was a surge in the exports. So in Q3, since we've not spoken to you since then, any new customers you've signed on or likely to in Q3, Q4?
This is daily life at SJS, so we keep winning new programs from same customers. We already have a very large portfolio of customers. We supply to many of them already. So we keep growing that. Wait for the Q3 results for us to announce any new customers. But largely it is mining the same customers for more programs because these are large mega accounts. And I think we are just at the tip of the iceberg. There's huge runway for growth.
Yeah, there is huge runway for growth. If you could give us a sense on, what your current order book is right now.
We don't guide.
From the end of, the last quarter to now, how many orders have you won? What's the updated number here?
We don't announce order book because these are aesthetic decorative parts. So fundamentally, there's a design modification that happens. But as I said, we won large businesses from Stellantis, from Nissan, from Whirlpool, and that continues to grow. So the order book is robust. We had announced 300 crores orders to be executed over the next 6 to 7 years from one customer. Another customer is about 50 crores revenue pool, and another customer is about 30 crores. So these are 2-3 big that we've announced so far. And as I said, we are working on more business.
You said in the first phase, getting back to the partnership with the TLA, the technology license agreement with BOE, in the first phase, your capacity will be 200,000 displays per year.
That's right.
And that will be ready by FY28. You should be ready with this. And when do you foresee the second phase of capacity expansion coming on stream? And for all this, what will be the total capex that you've outlined?
So currently, we've allocated 60 crores for this first phase of investment. And beyond that, as business develops, we will put in more money. As you are aware, SGS is a completely debt-free company. Internal cash equals are what we look at when we expand. So we hope to continue that with internal accruals. So CapEx is not the issue. Based on revenue visibility, order wins, we will add capacity as we go along.
You had told us that you plan to double your revenue in 3 to 4 years. Now, with this incremental revenue stream coming on board in FY28, is there any change to that target?
No, this is a part of that plan. So what we said to double our revenue, so we are opening up new verticals to increase our TAM, and that's the way we go.
Great conversation, Sanjay, for joining in. That's SJS Enterprises.
All right. With that, what we'll do is take a short break, wish Sanjay and his team a very happy 2026. On the other side, Technical Trades with Sudeep Shah and Mitesh Thakkar. Stay with us.
Welcome back. Let's now go across to Hormuz for the big delivery movers that we had on 24th, which stood out for the kind of volumes and price action.
Good morning, Rima, and some interesting names in this list in the broader markets, even though the market breadth turned awry by the close of the session. JBM Auto was one such name. It was the biggest single day gain and volumes that the stock had seen in the last 3 months. And Wednesday's volumes were the total of the last 64 sessions put together for JBM Auto, with over 3.5 crore shares being traded. The 20-day average is just under 4 lakh shares. And out of those 3.5 crore shares, only 14.5 lakh shares were marked for delivery. So delivery volumes remained disappointing, even though the 20-day average is only 75,000 shares. Now, Wednesday's turnover, which was close to 2,300 crore, is almost the same as the company's free float market cap, and the stock is down almost 25% from its 52-week high, which is close to around 850 rupees. Now, prime focus has been one stock that has been on the upswing over the last month or so. There's a 5th straight day of gains. The stock has declined only in 3 out of the 18 trading sessions we have had in December so far. Look at the volumes as well. Although the stock has kept moving higher, the volume volumes over the last 3 days have been on the decline, and only 75 lakh shares were traded, which is below the 20-day average of 95 lakh shares. And out of those 75 lakh shares, 26 lakh shares were marked for delivery, the 20-day average of around 14 lakh shares. But the last 1 month has seen the stock gain over 44% in value and is trading at record high levels. And lastly, KNR Constructions is a stock that has been beaten down all through this year. There's a fourth straight day of gains on Wednesday. It's up 20% in these last 4 trading sessions. And today as well, the stock remains in focus, mind you. Wednesday's volumes were the highest in 3 months. Over 1.5 crore shares were traded, the 20-day average of just over 13 lakh shares. And out of those 1.5 crore shares that were traded, 20 lakh shares were marked for delivery, the 20-day average of around 5.5 lakh shares. The stock down 50% in 2025, and it is turning out to be the worst year that it has had since its listing back in 2008. It would look to reverse that trend in the last few trading sessions of the year.
Take that point, Hormaz. Thank you so much for putting all those stocks on our radar. JBM Auto, I remember on December 22nd, the exchanges wrote to them asking them for whether there was a reason for the big spurt in volumes as well. The company said no, it was largely market driven, and turns out that on Wednesday as well, there was a fair amount of trade, the biggest single day gain and volume in the last 3 months. And KNR Constructions, that's a stock that we probably discussed with Siddharth Khemka of Motilal Oswal Financial Services, joining us now. Sid, good morning. It's Boxing Day, so, before a weekend and after a holiday, so sandwiched. And the street expects low volume, high moves to continue on a lot of these smaller names, largely in absence of big institutions trading with huge volumes today. So, individual stocks, let's start with KNR Constructions itself. The stock over the last 4 trading sessions has gained about 20%. And now we have the news that the company has gone ahead and decided to monetize some of their road assets worth nearly 1,500 crore rupees. How much of that do you think is in the price?
Hi, good morning, Mangalam. First of all, season's greeting to you, Rima, and the entire viewers of CNBC. I think, as you rightly said, some stock-specific action we'll see, otherwise a lackluster market until the start of 2026. I think this is something especially for KNR, I think this is a positive development which is expected to receive about 1543 crores. The monetization of 4 assets, I think definitely this is something which the market was not factoring in, and with the upcoming budget, there is some hope that after last 2 years of dismal capex, there could be some acceleration in capex, given that government has done a lot to boost consumption, including the GST rate cuts. So if you look at some of the defense, railway stocks that are in momentum, and I think even infra stocks like KNR could do well, we definitely have a positive view on KNR with a target price of 190.
All right, you have a positive view on KNR with a target price of 190. What are your thoughts on Castrol? Do you track that one? Because, the acquirer has made an open offer, and there is history of the acquirer actually going ahead and delisting all the companies that has gone ahead and acquired in the past. Do you have a view on Castrol post the happenings of Wednesday rather?
Yes. Yeah, Mangalam. So if you look at the parent company, Castrol has been on a lookout for a stake sale for a couple of months now, and I think that was in the news. The open offer is the first step that they have to mandatorily do in the Indian markets, which they have done, which is closer to the CMP. In respect to the core business, I think a change in management that could lead to more strategic thought process going forward, bring in more focus towards the new age businesses, the EV-based focused businesses. I think overall we believe that that could be a big positive. And if any delisting thing happens, I think that could be at a much significant premium, given that the stock has been under pressure for quite some time. It's a cash-rich business in India, high dividend yield. So the valuation could be much higher if the company goes for a delisting. But for now, I think the first step is to do the mandatory 26% open offer. I think long term, this is a strong brand. We are confident of the company ability to maintain its profitability and the newer management steering the company towards the newer business segment. So we remain positive. Again, in terms of valuation, we have a target price of 260, which is almost 40% upside from current levels.
All right. And as a house, you all have been positive on VIP as well. I remember a note coming by earlier in September. Post this deal, which completed on Wednesday, where the promoters sold their 32% stake 2 multiples, with them holding 20% right now. Do you believe that a turnaround is underway? And what are the things that multiples has to get right for your bet to fall in place?
So yeah, I think multiple things in way for multiples as well. I think that is again because of the lack of succession planning. They were looking out to sell out, and I think there is a lot of the market share loss in the recent past to some of the newer D2C brands. That has been a key concern. I think they would look at a refreshed strategy anchored around augmenting the supply chain efficiency. There has to be a strong focus on secondary sales, divesting some of the low profitability brands, and also look at closing some of the loss-making EBOs. I think that is something, a lot of things on hand for multiples. In terms of the legacy brand, a very strong brand recall, so that should be a big positive for multiples going forward. And we are optimistic about the long-term growth story in the overall luggage industry. Travel has been on the boom, and I think VIP with a new management in seat that could steer to a strong growth going forward.
What about Coforge? Would you have a view on Coforge? The board meets today. Stock has been a bit of an underperformer after a record run in the prior 2-3 years. There is some news report. Money Control is reporting that Coforge is looking to buy a company called Encora, which is led by an Indian person. The CEO of Encora is Anand Birje, who was previously the president and a founding member of HCL Technology. And the transaction size is supposed to be $1 billion. So that's a large one to digest if it comes through.
So yeah, if you look at purely in terms of the acquisition announced, I think that's a big acquisition. And for
if it comes through, because we don't have the details, this is what, there you have it. We have it now. Sources to CNBC-TV18, Coforge in talks to acquire Encora at a transaction valued at $2 billion. Encora is currently owned by private equity firm Advent International. So this is, I think, a big transaction, $2 billion.
Big transaction indeed. What we'll do is we'll take this short break, come back, get you details, and perhaps get in, our correspondent who's breaking this story as well to give us some more details on what he or she is picking up. That's about, Coforge and Encora likely to be bought for about $2 billion. Take a short break, come back pre-opening, and also with us will be Praveen Sahai of PL Capital for his perspective on India's consumer durable sector. We'll also connect with Sudeep Shah and Mitesh Thakkar for technical trades.
Welcome back. This is Bazaar Open Exchange. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. Pre-opening rates will come in just a bit. Before that, let's get in some technical ideas. Sudeep Shah, Head of Technical and Derivative Research at SBI Securities, and Mitesh Thakkar joining in to help with some ideas. Good morning, gentlemen. Mitesh, it looks like it's going to be a slightly softish start, but markets have been consolidating within this range. Are you sensing any breakout? What would be the Nifty Bank trade?
Yeah. Good morning. So, a breakout may not happen immediately, but what is good is that there is no breakdown happening. You look at the markets for the last about 2.5 months, we got a low at about 24,600 and then have rallied to about all-time highs of 26,200, even made a fresh high on an intraday basis. And the markets are kind of consolidating. So consolidating just around the previous highs is not a negative sign unless until there's a clear sign of a breakdown, and therefore I believe that eventually there is a stronger chance of us breaking beyond 26,380, 400 and heading higher. But till then the markets are still consolidating, so buying on the index, if somebody is taking a fresh position for a good risk reward ratio, should be closer to about 25,800.
All right, Sudeep, your index calls?
Good morning. See, what we feel is that markets in the next couple of days may be in a range between 25,900 and 26,300, 26,350, this 300, 350 point range. But yes, by and large, overall, from a positional perspective, we feel that till this 25,800, 25,900 zone is guarded, we may see eventually we may see a upside up to 26,500 and beyond. So positionally, the view is very strong. from the next couple of days, since we are just into this holiday mood, I feel the markets may be in a range between 25,950, 25,980 and 26, 250, 300 thereabouts on the upside.
All right. Mitesh, your stock picks?
Morning, Mangalam. I have two buys and two sells today. A buy on Nuvama, which made a fresh swing high by around 7,600. I think the closing was 7,615. So buy around 7,600 with a stop just below 7,500 and a target of 7,800 is what I recommend. Similarly, Dalmia Bharat Cements is a buy. Let it cross 2115, that's the pivot. So above that, buy with a stop at about 2084 for targets of 2175. On the selling side is Adani Enterprises with a stop at 2246. And I would look at a short-term target of around 2170. And sell on Axis Bank with a stop at 1242 for targets of 1195.
Right, a long on Nuvama Wealth and a short on Axis Bank and Adani. And Sudeep, do you have a long short mix or you're veering towards one side of trade?
One side of trade, Mangalam. Two buys. One is 361 VAM Limited, Wealth Asset Management. Here we've seen a breakout, a symmetrical triangle breakout on the weekly charts, as well as the stock has closed at its highest level post July 2025. So what we feel is that this breakout could continue and fructify on the upside. 1170 is the stop loss that we are putting at, and the targets on the upside that we feel here could come is 1250, 1270 levels. So 361 is a buy. The second stock is CSB Bank. Now we have seen all these mid-sized private banks moving and giving good returns in the last several weeks. And now one more bank, CSB Bank, has broken out of its consolidation. We feel here the stock is well poised to make a move up to 445, 450 levels in the coming few weeks. On the downside, one can keep a stop loss at 407.
All right, we take that point. Thanks a lot, gentlemen, for stopping by. We'll get back to you at 9:10 for your calls there, and thereafter, once the market opens as well. Meanwhile, just before we get to the news, the bottom of your screen, and speak to Praveen Sahai, just watch out for the quick commerce space this morning. Why do I say that? Because our colleague is finding out that Zepto will perhaps file its $750 million to $800 million IPO in December itself, most likely today. And their order volume and net sales value have grown over the last 6 months by about 45%. And they will have the largest cash position of any new age company going public post this IPO. Remember, they have about $1 billion of cash. And this would be interesting at a time when Swiggy has recently raised about $1.5 billion itself. And Zomato sits on nearly $2 billion of cash themselves. Interestingly, we also have a note coming in from CLSA on the quick commerce space. They're saying for the week ended 15th December, Zepto saw the highest week-over-week increase of 1.2 million, followed by Blinkit at around 0.4 million and JioMart as well. These are user additions. Swiggy, Instamart and Big Basket each added about 0.3 million users week on week, and Blinkit saw about 1.6 million downloads for the week versus Swiggy and Instamart at around 1 million and 0.5 million at Zepto itself. Within food delivery, Zomato's weekly average users week on week was slightly weak, while Swiggy saw a 1.3 million increase. All of the beauty players saw a minor decline in weekly average users, and within e-commerce, it was Flipkart which saw a decline of 4.2 million users week on week. Meesho was flat, and Amazon saw a minor uptick of 2.4 million users. But Zepto week on week was doing extremely well. Quick commerce on our radar. Let's move on from quick commerce to consumer durables. Now we're joined by Praveen Sahai, who's the research analyst at PL Capital. Praveen, winter's been slightly harsh in many parts of the country, but not as harsh as what the projections were. What does that do to the inventory lying with a lot of these retail sales players, and as a result of which, your call on the consumer discretionary durable space?
Yeah, hi, Mangalam. Thank you for having me. On the RAC, especially the seasonal product, if you ask me, definitely the inventory is at the higher level, 65 days, or you can call it a 3 million around, and which is a quite a higher on the, throughout the season, like from the summer, bad summer, and then second quarter, and now we are in third quarter, and is still with a higher inventory. Definitely, that's one of the concern we are carrying right now for the next season. The second also concerning part, what we are looking at is the RM price inflation, or with the B norm change, there would be a further increase in the cost. So how to pass on those? So definitely the concern is still prevail. This quarter is expected to be a muted. There is no much of a relief from the GST cut in terms of the volume. But more I'm worrying on the margin front, because if they will not able to pass on the RM price inflation or the BE norm, then that will be a big problem for the margin front, especially for the RSC players. And the second thing on the so far the winter has been quite normal, not very harsh. Then we have to look at like how the Jan and the Feb, whether it's extended or not, like of a rainy season. If that will not, then definitely like of usually we see chronology when there is a harsh rainy season, harsh winter. Then after there is a harsh summer or the extended summer. So that is another concern we are carrying with actually right now. So far, however, if I look at sequentially, there would be some improvement in the the inventory, or the slight improvement you can say in the secondary sales, but not a material to impact the numbers. Numbers is expected to be very soft for the Q3.
And there was recently an analyst initiation coming in on LG Electronics as well. Not sure whether you cover that or not, but the note was on the sell side saying that perhaps they are losing market share to a lot of the listed larger players too. If you could give us a sense on your one view on LG Electronics, and secondly, your pecking order and target prices on the consumer durable space.
Yeah, we have a coverage on the LG, and also as you asked about our top pick, definitely the LG is one of them. And in the consumer durable, why we like the LG is a diversified throughout the consumer durable segment. One, second thing is if you look at in all the large white goods, they are almost the market leader. They have very good penetration in the premium portfolio. And regarding the market share, definitely they are protecting their premium market share, which is a more good for the margin front or the profitability front. So that's why we are liking that. And even their penetration throughout the B2B and the AMC businesses, which they wanted to grow up very faster from here, is expected to drive the numbers as well in the coming years. So, and also if I look at a 9-10% CAGR in the earning, that stock is even cheaper than the Havells right now. At the same offer like Voltas trading at 36 time FY28 earning. On that front also, it's looking better off.
All right, so LG continues to remain your top picks. You're not too worried about the market share loss, because at the premium end, which is non-margin accretive, they are continuing to hold their market share. Praveen, thank you so much for joining in. Wish you and your team very happy New Year and season's greetings as well. With that, let's get to the important story that our colleague Rachna just broke, which is that Coforge is in advanced talks to acquire a stake in Encora, a $2 billion deal. Rachna joins in with more details. Rachna.
Sources tell us that Coforge is in advanced talks to acquire a majority stake in Encora in a transaction that's pegged at around $2 billion. Now, the deal would mark a potential exit for private equity major Advent International, which currently holds a majority stake in the company. Now, to put this in context, Advent entered Encora in 2021, acquiring the company from Warburg Pincus at a valuation of about $1.5 billion. Now, Warburg had backed Encora during its earlier phase of expansion, helping build scale in offshore delivery and deepen its US enterprise client base before selling out to Advent as the company transitioned into a more mature digital engineering platform. Now, Encora operates squarely in the digital engineering and product development space. Its core strengths lie in cloud-native application development, data engineering platform, modernization and enterprise software services, with a strong concentration of clients in North America. Over the last few years, under Advent's ownership, Encora expanded both organically and through acquisitions, positioning itself as a high-growth engineering-led alternative to traditional IT outsourcing firms. For Coforge, this would be a transformational transaction. The company has historically been a mid-sized IT services player with strength in BFSI and travel tech, but limited exposure to deep product engineering. Encora would significantly shift that mix, is what we're picking up from our sources. Now, as of March 2025, Coforge reported a net cash flow of around 474 crore rupees, cash and reserves of roughly 6,000 crore rupees. That balance sheet does provide flexibility, but clearly not enough to fund a $2 billion deal outright. As a result, Coforge board is expected to consider a fundraise, potentially combining debt and equity to support this acquisition.
Thank you very much for that. Transformational indeed, but a very ambitious one. Coforge's top line itself was $1.5 billion in FY25. That said, it's been growing rapidly. Last year, FY25, the company's revenue growth was in excess of 30%, building on the 13-14% growth that it had in the prior years. So that's Coforge for you. We'll wait by to see how the street reacts to digesting a large acquisition by Coforge. Mitesh is now back with us for a 9:10 call.
See, I'll go with a sell on Axis Bank for targets of around 11.95.
All right, sell on Axis Bank. Sudeep, you have a call? All right, okay. So sell on Axis Bank. Let's do a quick recap of the top stocks that we covered earlier this morning before we, wait for market opening. In the positive arena, we're looking at VIP Industries and KNR Constructions. Alongside that, stocks in focus would be Adani Ent, Ola Electric, Vikran Engineering, and Castrol India, IEX, Coforge, along with IndusInd Bank and Strides Pharma. So a bunch of stocks which are likely to be on our radar. GIFT Nifty last indicated a 60-point downtick at the open, and the pre-open has settled largely flattish, so which is more of an outperformance as compared to what the GIFT Nifty was suggesting. So we have a couple of seconds to go before we look at trade. In pre-open, a couple of stocks that are doing well. Lenskart is one which is up, settled slightly higher. There is a brokerage note that is coming on Lenskart as well. Avendis has initiated coverage, largely positive on that one. Vikran Engineering, which saw about a 7% gain on Wednesday's trading session, has won another order of 450 crores. So let's see how that stock pans out. And finally, we'll watch out for how KNR Constructions also does after a 7% gain that we saw on Wednesday, and then after the news of them having monetized assets worth 1,500 crores. And now in pre-open, it is up around 8.5% too. So 3 seconds to go for the market to open. As we look at it, the Nifty is open. There goes the opening bell, and it is a slightly reddish start, but nothing as lower as what the GIFT Nifty was indicating. And the Sensex too has opened about 0.2% lower, with the Nifty Bank around 59,112 mark. Remember, for the Nifty Bank closing above that 59,300 mark, or the 20-day moving average, will be extremely crucial to track. The heat map comes up for you. The advanced decline, at least at the opening, is fairly split right down the middle, and that's exactly what the heat map is telling. More red than green, actually. Adani Ent and ICICI Bank, not much changed. In the gainers list, you do have Trent, which was among the gainers on Wednesday's trading session as well. And prior to that too, we saw some bit of fund buying supply getting over on that counter. BEL doing well. A lot of these defense and PSU names likely to do better as we move towards low volume trade. But Eternal is lower. Among the top losers on the Nifty, Wipro, Bharti Enterprise, Bharti Airtel and ITC, along with HCL Tech, Titan, all of them marginally in the red. So heat map, more decliners on the Nifty than the frontliners. Rima.
Well, mid-cap index opens mildly lower, but a flattish bias. Negative advanced decline ratio in favor of the stocks declining, but the gap is not large. About 1,000 stocks advancing for 1,300 stocks in the red. Vikran Engineering is clearly a big mover today. Large volume stock opens out with a gain of about 5%. Taking its weekly rally to about 14% on the back of order wins. Ola Electric is having a positive start to trade on the back of getting in some PLI benefits in excess of 300 crores. Hindustan Copper has been one of the big movers of this year. 82% rally as we speak on the back of the rise in silver prices. So Hindustan Copper continues to do well, as are many of the ETFs, whether it's Tata Silver ETF, HDFC ETF, Nippon India Silver ETF, gains of close to about 4.5%. Castrol India is now inching towards the open offer price. So Castrol India opens out with a gain of about 2%. You've got strength coming in Lenskart. IEX is a drag. IEX has slipped about 3.5%. Some concerns on the regulatory front, but it's reports-based as of now. VIP is struggling, 3% lower in opening trade. And Zepto, looking to file those confidential papers for the IPO, looking to raise some more money, is putting pressure on Swiggy and Eternal. So, that is a pocket where you are seeing weakness today. Swiggy down by nearly 2% and Eternal is the top Nifty loser right now. Sorry, Eternal is the top Nifty loser. BEL is also seeing some buying interest. I think there is a Bloomberg report about a potential MOU between BEL and Astra Micro. So that's got the street a tad bit excited. The mid-cap index has managed to inch back into the green, but very, very flat as we speak. Pretty much unchanged now on the key indices.
Pretty much unchanged, and that's exactly what the expectation was. The stock in the morning, though, on the downside has to be IEX. The reports are suggesting that the CERC will evaluate revision in transaction fees charged by power exchanges. So there have been a lot of regulatory overhangs on IEX in the past as well. Now the stock down almost 3.5%. And with the copper prices being at record high, along with silver being at record high, Hind Zinc, Hind Copper seems like the obvious beneficiaries here, and we've seen that up move in the past as well. Bharat Dynamics is not, BEL is not the only defense stock which is doing well. Bharat Dynamics is the other one. And then we have seen some traction build in, a lot of these defense PSUs and rail stocks as well. So Mazagon Dock is doing well. We've seen some traction in IRFC, Titagarh Rail Systems. All these stocks doing fairly well. Solar Industries is the other one from the defense pack. So it's largely defense and, rail along with PSUs which are seeing a spike. Ola Electric opened fairly well in the green, currently has given up a wee bit from its highs. Castrol continues to surge. So after an 8% up move on Wednesday, that settled with just about 2% in terms of gains. Castrol is up around 3.5% right now, and VIP is seeing a vociferous amount of profit booking. Greenply Industries has seen a lot of volume uptake this morning. Volumes are nearly 30-35% of what we see on a daily basis in just the first take. And Greenply Industries, not Greenply, Greenply comes up for you, sitting with a gain of 5.5% at the open itself. So a large part of these, moves could also be on, high impact because of thinner volumes. So any more volumes than what one sees usually would lead to a disproportionate amount of price change, as we are seeing thinly traded moves. The Nifty has recovered from the lows. The mid-cap index now up around 0.1%. With that, what we'll do is welcome our market master for the day in our studios. Mihir Vora, the Chief Investment Officer at Trust Mutual Fund, joins in now. Mihir, as always, a pleasure speaking with you. And, we're looking at 2025 as the lost year for a lot of the larger names, a lot of the mid-caps, broader markets as well. We just about managed to hold resilient this year. And even if you account for, the decline that we've seen in the rupee, then we're negative, severe underperformance. So let's start with your open big question for 2026. What are your key aspirations, hopes, and what do you think will really outperform in 2026? Where should one put their money?
Morning, Mangalam. Thanks for having me, and season's greetings to you and all your viewers. 2025, as you said, you can say it's a lost year, but I'd say that it's a lost year after many years of outperformance. So, the whole concept of mean reversion probably worked out this year. And while we did see a sharp correction in some of the mid-cap names and the small-cap names, we are seeing in the last few weeks a bit of a bounce back also. So I don't think all is lost. We also must understand that 2025 had a high base of expectations as well as valuations to start from. So to that extent, we have done actually quite well in spite of the Sindoor episode, in spite of the worst of the tariffs that we saw from the US, and that still is not resolved. So many headwinds in terms of valuations as well as fundamentals, weakening currency, etc. So the fact that we are still at this level as far as the Nifty is concerned is actually a positive, I would say, considering where we started from. The good thing now as we enter 2026 is that the base of expectations has been reset. We've seen a price correction in the broader market. We've, of course, seen a time correction in the overall market. And with the currency being where it is, I think a small trigger like the trade deal happening can actually lead to the Indian outperformance in 2026. So I think expectations is everything in the market. Right now, expectations are low. Domestic flows are, healthy. FII flows have been significantly negative. If FII flows turn positive, I think we are in for a good 26. So I don't think the ask is very high from 26.
What would it take for the FII flows to turn positive, and where are you on the earnings expectations?
So earnings expectation, I think is cyclical. Typically, what I've seen is that as the market moves, the earnings expectations also keep moving. So as of now, we are talking about single-digit earnings growth, high single digits for the large caps, and a little higher for the mid and small caps. So I think that expectation continues. From the FII point of view, I think the big trigger will be stabilization of the currency and the trade deal happening, because that I think in FII's mind, the high tariffs that India is facing puts it a notch under China. See, till 2020, early 25 or end of 24, China was a no-no, in the sense it was very skeptical. People didn't want to trust China. It was almost untouchable, and we've seen that 20-year underperformance of China in the equities markets. But the DeepSeek moment actually coincided with extreme valuation, and when people wanted to reallocate, they started reallocating to China. So I think a decent amount of money went to China and emerging markets. India actually got left out. So I think this is the year, 2026 will be the year when India can catch up if the trade deal happens. And I think it's only a question of time. India and US can't afford not to have a deal, whether it's in a few weeks or a few months, I don't know. But it will happen, and that will be a significant trigger.
Okay. Mihir, on mid-cap IT, I mean, the favorites were a Coforge and Persistent. And now we're getting reports about a very large deal by Coforge. I mean, Coforge's market cap is $6.5 billion. And I don't know if you caught what Rachna was telling us, that they're looking to buy a mid-cap AI sort of a company called Encora, which is backed by Advent for $2 billion. So it's a transformational, it pushes it up in the big league. But it's a big deal to digest also, and will involve a lot of fundraise because it doesn't have too much cash on its books. So keeping that in context, if it comes through, how will the market read it? As a investment, as a CIO, when such news breaks, how do you analyze it?
So, typically, obviously, while I can't comment on individual stocks, but it's always about, what capabilities are you acquiring and what's the valuation at which you are acquiring. So if there's a good balance of capabilities and valuations, then I think the market should treat it positively. But if the management or the promoters are doing something just for the top line and just to show growth, then probably the markets will be a bit more skeptical. So I would wait for that framework to pan out before we take a call.
Right. Where do you stand on the rail, PSU, defense themes of the previous years, which came undone all of last year? Now, from the peak, they're down, 25, 30, some even 40%. But over the last few trading sessions, they've begun to see some traction. Would you ascribe any sort of value to the traction that we've seen, or do you think this is just year-end radical random moves that are taking place?
A bit of both, I would say. First of all, as you rightly mentioned, the sector did underperform quite significantly. Stocks down 40 to 60% in some cases, so they're bouncing off that correction. But I also know that the DAC is meeting. They are trying to push through orders, and once those meetings are done, then we'll see the orders flow in. So, with a correction, the market always looks a bit ahead. So now the hope after this correction is building up that the order flow will start again in these sectors.
So which is the sector you're most bullish on? If you had to play for one thematic sector for next year, as a, invest in a thematic mutual fund, which one would it be?
Thematically, I would say equally biased towards the capex theme and the financials theme. Within financials, I would say that so far we've been more bullish on the capital markets and all those players. But the way banking sector has underperformed, especially the private sector banks last year and even before that, they offer a good balance of valuations and growth. We are seeing green shoots in credit pickup. That was the only missing link in the banking system. So with credit growth touching say 12 to 13%, I think private sector banks, the banking index or banking thematic fund can do well. We continue to remain positive on the capital markets theme. Second is, as you rightly mentioned, the defense theme. For example, there is a case for these stocks to do better after the correction that we've seen in the last 1 year.
Where do you stand on the consumption space? The reason why I ask you is because, over the last 12 months or so, there have been a lot of nudges by the government to push consumption. And now, as we speak, 6, 7 months, 8 months down the line, green shoots have started to appear. And once that happens, it really bolsters growth. These stocks have been underperformed, especially on the staples side. Do you believe that, staples is ripe for a comeback, or maybe still back the new age growth companies which are even at a higher valuation?
Absolutely. The latter, I would say. Staples for us is now a mature sector. Of course, there will be pockets of excellence. Stock picking is always possible. But the vast majority of the staples sector is mature with single-digit kind of growth, which really does not excite us given the valuations at which they are trading at. On the other hand, the new age companies, which are B2C or even D2C kind of companies, they do offer a longer runway of growth. And in our investment framework, the length of the runway of growth is very important, which is where the new age companies fit in.
Despite the valuations, you believe that the growth runway.
We believe that the runway is long enough for those valuations to be justified.
And where do you stand in the travel and tourism space, hospitality? It's seen a decent rally. I mean, it's not an undiscovered theme now, but there is still a long growth runway there.
Absolutely, especially on the online players, for example. Even hotels, for example, they've corrected. In the past few months, even hotel sector has stabilized or time corrected, I would say. So hotels, airlines have corrected. So in general, the travel pack, in spite of good news, has corrected. So it's not, the consolidation, I would say, is done. Time consolidation and price consolidation, and next year looks good for that sector.
So did you buy Indigo in the peak of the crisis when the prices were a lot?
I can't comment on individual, but I would say that we do have exposure to this sector.
All right.
Fully invested as of now?
We got about 5% cash, which is plus or minus.
Which is normal.
Which is normal, yeah.
Got that. And incremental cash will go in. If, as and when, as you keep getting these SIP monies, financials is one.
Financials, anyway, we are positive on, so we already have enough exposure. We probably have increased exposure in the last few weeks to some of the indirect or direct metals plays.
Okay.
Because, the precious metal place does seem to be, much stronger than expected. And I've been bullish on precious metals in any case. So that's where, given the rally in gold and silver, precious metal plays as well as some of the gold financing plays.
Gold financing.
Yeah, absolutely.
The brokerage notes that have come this morning, among the many initiating coverages that we've seen on Lenskart, the recent one, this one comes in from Avendus. They've initiated coverage with a buy rating. They have a target price of 490. Remember, the issue price of the company was closer to 411, and the stock has been doing well, 461 right now. They're saying that the disruption in eyewear retail through manufacturing to consumer model, M2C, is very important because it solves for a key category challenge and core business challenge as well. Leverages proprietary technology to enhance operational agility, replicating its India playbook to scale globally and expand into international markets as well, such as Japan, Singapore, Thailand and UAE. Over the holiday, we got another update coming in, them buying some stake in a Korean company as well. They expect the consolidated revenue of the company to grow between 21% compound and expand margins at by about 550 basis points. They're positive on the stock, they're positive on the sector, they're positive on the theme, and they have a target price of 490 rupees. I remember us having a conversation about these new age companies, the ones that came with IPOs, Indian businesses looking to scale the Indian playbook to neighboring countries as well. In that, where does a company like this fit in your overall scheme of things?
Absolutely. Indian companies are looking global. For example, some of the other online companies also, whether it's in ticketing or facilitating of bookings, etc., those companies are no longer Indian companies. They are, expanding globally. So once you have that core skill set of either the core software engine or the core platform, or in certain cases even manufacturing platform, there's no reason why we should not go abroad. And I think the companies are doing the right thing.
Any contra view for next year, which the street is perhaps getting wrong, reading wrong?
As of now, everything is contra in the sense that sentiment is so low. People are not really bullish on any one thing in a big way. But
financials is fairly a consensus.
That's what I said. So it's not that contra anymore, in the sense, which is the sector which has underperformed the maximum. I would say sectors like FMCG, some of the pharma names are, have underperformed. The generic pharmas, for example, they've been the worst hit in the last year, severe underperformance. So some of those pockets of value can emerge, I would say.
We were speaking to another market expert as well, and their contra view was that 2026 might not be the year of gold and silver. With the kind of massive rally that we've seen in the past, 2024 was great. People believe that maybe 2025 will not be that year. But 2025 was even better for both gold and silver and even platinum.
Correct.
2026, what happens? Does this outperformance continue? Or maybe even if they don't perform as well as they did in 2025 because of the base effect, etc., do we see correction or do we see just stabilization?
So it may be a bit front-ended given the momentum that is built up in the last few weeks. The gains may be front-ended, and then you might see a period of consolidation or correction. But structurally, the story, as far as the fundamental story of inflation hedge, asset diversification, that continues. You see, remember in 24, 25, it was the central banks which accumulated gold and silver. We really haven't seen the speculators come in.
Right.
So this might be the year where the retail actually might also jump in, the Bitcoin holders and all those guys.
Right. So you're calling a hold on gold as against a short or a long?
No, absolutely not a short for sure. As I said, the asset allocation to gold as far as international institutions are concerned is still very low. And it's only in the last 1 year or 2 years that central banks have seriously started accumulating gold, and that can last for a while.
And central bank are generally price insensitive. So if they want to accumulate to hold a certain amount, they're not really going to care about the price right now. And it just feels like the geopolitical tensions are no longer episodic. They're constant. Like even today, there was this Trump, US attacking Nigeria. So in that sense, gold is a safe haven, seems to be working. But yeah.
It's not only central banks, just to, it's not only central banks, even global institutions, pension funds, endowments, they have very little allocation to these asset classes.
Right. So
now silver has become the third largest asset class, fourth largest asset class in the world.
Even family offices in India are buying a lot of gold and silver this year.
As against, just families which were buying a lot of gold and silver. But I wanted your thoughts on old economy. Now, you've spoken about new economy, growth runway, all of that. Old economy, is there any value unlocking potential? Because Coal India, they've announced the unlocking of value in some of their subsidiaries. The stock has done well, in the sense that this month it's up 8%, but obviously it's not performed like some of these high flyers. So do you think at some point some money would go back, names like Coal India, etc.?
We always see a rotation to value once in a while, but from our investment style point of view, they don't make structural buys for us, So while we may dabble in them once in a while, there'll never be core holdings in our portfolio because that's not in our investment philosophy. There are other styles of investing which, of course, would love to have those kind of dividend yields, etc., but not in our framework.
Debt is one of those forgotten asset classes over the last couple of years at least, because equities, yes, the retail sentiment has increased, a lot of the allocation has increased to equities as well. And with the outperformance of gold over the last couple of years, like Nima mentioned, a lot of these family offices which would earlier deploy that capital into debt is now coming back to gold, etc. Do you think at some point debt becomes an attractive asset class as well? With the open market operations, the government looking to reduce the yields?
Certainly, Indian debt, yes, not international debt.
Yeah, Indian debt.
Yeah, Indian debt, of course, because I think this year has seen the worst of the currency, the worst of the liquidity issues, etc. And now the government and the central bank are turning dovish. So that makes a good setup. And with inflation being under control at 3 to 4%, I think we are in for a good setup for debt. So part of the asset allocation should go to debt also.
So a 100 rupee investment in 2026, how would you allocate it between gold, silver, debt and equities?
Equities, of course, would be more than 50%, with the balance 20 to 25% in debt and the balance in gold and silver.
Wow, that's quite a bit to gold and silver. Thank you very much, Mihir, for joining in. That's the word coming in from Trust Mutual Fund. We will get to Vivek now because IEX is still struggling in trade. Vivek joins in with more. Vivek.
Well, that's right. As far as the regulatory concerns are there for IEX, first it was market coupling, expected to get implemented in Jan, after which, now you're seeing a fresh concern. Economic Times has reported that CERC is now evaluating a revision as far as transaction fees are concerned. This is across all of the power exchanges in India. Remember, CERC is now evaluating or considering a lower unified fee of close to 1.5 paise per kilowatt hour per side for trading segments. So currently, both buying and selling will cost, transactors close to 3 paise per kilowatt hour versus the current 4 paise per kilowatt hour. So almost a 25% cut as far as transaction fees are concerned. In case this particular development is implemented, this will mean a material cut as far as earnings as well as the top line for IEX is concerned. Now, along with that, longer duration contracts such as term ahead market, they are considering a cut that could be even further of close to 1.25 paise per kilowatt hour. We've reached out to IEX, so far they have not yet commented on the development, but it's still a developing story and the final decision will lie in the hands of CERC.
All right, a final decision lies in the hands of CERC, as of now down about 2.5%. But Castrol is definitely one of those stocks where, we've seen some traction after an up move that we saw on Wednesday, which resulted in the stock ending at the lower end of trade after seeing that big immediate spike. But the news of the open offer has the street a lot more excited, up nearly 4% this morning. And a consortium of Stonepeak Motion JV Co. and CPP Investment Board has launched an open offer to acquire 26% stake in the company. This follows BP's announcement that it will sell 65% stake in Castrol's global entity to Stonepeak. Sonal joins in with the details of that one once again. Sonal.
Castrol continues to be the big story. Let's address the news first, because now there's an open offer which has come by from Motion JV Co. Stonepeak CPP Investment Board. They plan to acquire 26% stake in the company at 194.04 rupees a share. Now remember, if we compare it versus Wednesday's closing price, this is just a 2.5% premium. So the street was expecting maybe a little more, and that has come in as a disappointment. Now let's talk about who are the big holders in this particular stock. The institutional holders, where FII is at 10.3%, Government of Singapore holds 1.33%. In DIIs, the mutual funds hold around 14.95%, but LIC owns a big chunk, 10%. So the open offer, when it actually comes by, LIC could be a key deciding factor as to what happens with the open offer when it starts for the stock. Other than that, now remember, Stonepeak is the one which has acquired around 65% stake in the global entity. This company has a history of delisting all the acquisitions. For instance, in 2025, it delisted Air Transport Services Group. In 2024, it delisted Acumen Inc. In 2022, it delisted TK LNG Partners after acquiring all these companies. So what happens with Castrol Limited, that's the India one, is key to watch from here on. Now, just to give you a brief of what happened on Wednesday, British Petroleum or BP agreed to sell 65% stake that it has in Castrol Global, that is Castrol Limited, to Stonepeak at an enterprise value of $10 billion. The total consideration here was $6 billion, which included deferred dividend payments, and also it will be used to reduce the net debt of BP going forward. Will they only sell 65%? No. Following a 2-year lock-in period, they also have an option to sell the remaining 35% stake in the company. So that will be very, very important to watch. The transaction is expected to complete by end of 2026, subject to some approvals, and a significant proportion of Castrol JV minority interests relate to the shareholders of the publicly listed Castrol India Limited. So all the decisions, and once the transaction is completed, what happens with Castrol India Limited is the key to watch, because the open offer will start only after this process or this transaction gets completed. Kotak has an ad rating on the stock with a fair value of 210. They expect the stock to be range bound till the time open offer process is over, and open offer will trigger, as I earlier mentioned, only when the global transaction is over. They say transaction will take place at a promoter level, of course. There's nothing happening beneath, so it will not impact the operating performance of the stock or the company in this short to medium term. Now let's talk about some more numbers, because BP holds stake in Castrol since 2000, and the Indian listed entity has been listed on stock exchanges since 1982, and in last 20 years the stock is up 7.3 times. In last 10 years the revenue CAGR has been just 5%, profit CAGR has been just 7%. So stock or the company hasn't done much in terms of revenue and profit growth in last couple of years, but their dividend payout has been quite strong. If you look at the numbers, it has been anywhere between 66% to as much as 139% in 2024 itself. It follows a calendar year. So their shareholder return in terms of dividend payout has been quite strong. What about Stonepeak, the company that has actually acquired that 65% stake? It is an alternative investment firm with asset under management of around $80 billion. They have a lot of investments in renewable or clean energy or the energy space overall. Something like Lestari Cooling Energy, Madison Energy Investments, Ørsted, which is a European company. There's North Star Renewable Power, Peak Energy. So some of the portfolio companies are largely in the energy space. So it'll be interesting to watch out for whether they buy the remaining 35% stake. Most importantly, whether they go ahead and delist Castrol India, because that is something that they've done with the previous acquisitions that the company has made.
Thank you for explaining that so well. Get into a break. On the other side, we'll be joined by Sanjay Kulshrestha of Hutco to talk about their 2026 outlook. Stay tuned. Welcome back. Hutco is the next management on the show now. The stock is down about 9% in 2025. Now, this is a PSU, a Navratna company, which provides finance for housing and urban infrastructure projects across India. As I said, the stock has been a bit subdued this year, down 9%. But it's on the back of two fantastic years. In 2024, Hutco's share price was up 85%. In 2023, it was up nearly 140, 150%. And the big tailwind was the PMAY scheme, and then there was just generally positive sentiment and re-rating seen in PSUs. Sanjay Kulshreshtha, CMD of Hutco, is now joining in. And the three focal points that we want to talk about: one, will the rate cut push the net interest margins higher? Two, is the company on track to achieve 450 crore of recoveries in H2? And will the AUM exceed 1.6 lakh crore as was earlier guided this year? Thank you very much, sir, for joining in. This is Rima here. Season's greetings to you. But first, let's just begin with getting a sense on how Q3 has been. Can you tell us about the trends that you witnessed this quarter in terms of sanctions, disbursements? Now, H1, we had disbursements breaching 25,000 crore. Is it fair to assume disbursements will comfortably cross 50,000 crore mark as guided?
Yeah, thank you so much and good morning. You are right that we are following the path of the growth, and we had planned that by 2026, our AUM will become 1.5 lakh crores, and we are very well on the track in terms of the sanctions, disbursement and NIMs and the spreads. And the way markets are supporting us, the states are supporting us, which is backed by the robust Government of India policies towards the infrastructure creation for Viksit Bharat. So definitely we are on the track, and initially in the start of the year, we had already given the guidance that we will be achieving around 50,000 crores of the disbursement, and we are very well on that track.
All right, you are very well on track for that. If you could give us a sense on the disbursements that happened in the third quarter, the outlook that you have for the entire year for AUM growth, and also the spreads.
So we are targeting a growth of 25% around CAGR, and the way the sectors are emerging, the states are coming with the sense of the Viksit state, and we are working in all the states, and all the states are coming up with large infrastructure projects. Because if you see, we need to create our new cities, we need to upgrade our cities, and the way the investments are required, it has been estimated around 70 to 80 lakh crores of the investment is required in between 21 to 36. So this is a 15 years kind of window on which we need to upgrade our cities, and we are well on the track. And the way Government of India has came up with a lot of programs, starting from the PMAY or Jal Jeevan Mission or Urban Challenge Fund, which is recently in the last budget which was announced, to upgrade our cities, and we need to upgrade our cities to the global standards. At the same time, we are working with the transitions or mobility or metro. So there is lot of potential, lot of tailwinds, lot of planning, lot of legislative and the policy support other than the capital supports from the Government of India, and company is moving ahead on that.
You know, just to clarify on the AUM bit, you said 1.5 lakh crores by the end of this year, right?
Sure.
But that's lower than 1.6 lakhs that you had earlier guided for. So is there a bit of a shortfall there?
No, there will not be any shortfall. I am talking about the targets which had been given around 2 years back. We will be surpassing this 1.5 lakh crores, and around 1.6 will be the practical number that we will be achieving.
So you said one of the big tailwinds was the PMAY scheme. Now, PMAY 1 was a success. PMAY 2 was launched about a year back. But you know, when we spoke to you post Q2, you said on account of state level delays, there was no disbursement, no sanctions happening under PMAY 2 scheme. So can you give us an update on that? When do you think you will start disbursing loans under PMAY 2?
So it is a good thing that states are not requiring a counterpart funding, and they are financially sustainable and supporting the PMAY program. At the same time, because presently they have that kind of FRBM limits available with them, and they are supporting their own project, which is 40% contribution, that is a counterpart requirement by the states. But we are very hopeful because the state require a lot of funds. The way they are planning their infrastructure, they need a lot of funds, maybe in PMAY or Amrit or Jal Jeevan Mission or road networks or new cities. So I'm very well sure that, but our target of 3 lakh crores by 2030 was apart from the PMAY.
Got that. So you're saying that the reason we've not seen any sanctions or disbursements under PMAY2 up until now is not because, there are some execution issues with PMAY2, but rather the states have adequate funding with themselves, which is why they do not need the assistance of a company like HUDCO. So, when last... Sorry, go ahead.
In Q3, we had sanctioned one PMAY project. This is the good news.
Okay. How much was it, sir, in Q3?
Around 5,000 crores.
5,000. And in Q4, do you think it'll pick up? I mean, is just Q3 the start?
The initiative of Government of India has already picked up.
Okay.
So we will be the beneficiary maybe in Q4 or years to come. But if you see, housing is not alone. Housing is connected with the roads, drains, roads. So everything is connected and we are beneficiary of these kind of infrastructure finance.
Okay. So just to close this point about PMAY2, so last year you said that you were hopeful of disbursements of 1 lakh crore on account of this in 4 to 5 years. Now 1 year has gone and we've only seen 5,000 crore of disbursements. Do you think this 1 lakh crore target could be missed because of the reasons you...
It was not a target. It was not a target for the company. It was a support to the states without compromising on our larger perspective of AUM of 3 lakh crores. So we are very hopeful that states will be requiring. But other than that, we have a lot of programs, lot of projects which are sanctioned for the states.
Got that.
All right. And what is your target on the ROA as well as NIMs? You had expected a 10 basis points improvement in the third quarter, further improvement. Has that happened? And by the end of this year, can you do that 2.2% guided ROA?
Yeah. If you see, the company believes in the bankable, sustainable and viable kind of infrastructure across the country. And I am very sure that ROA will be plus 2%, 2.1, 2.15 kind of things. And at the same time, we will not be compromising on our NIMs. Our NIMs will remain plus 3% and our spreads will remain plus 2%. And for that, we are taking a lot of measures, starting from the treasury management to internal improvement, reducing the cost of compliances, cost of funds. So all these measures have been taken.
Okay. So how does the recent rate cut by the Reserve Bank of India change your cost of funds and your expected NIMs and spreads?
Yeah, the repo has just been reduced and we are very hopeful that the bond price will also start coming down the way RBI is continuously supporting the markets through the infusion. And at the same time, bank loan had been reduced immediately by 25 basis points. And we had planned strategically that a lot of loans we had taken from the banks. You may have seen our balance sheet in Q2. And they are all repriced less than 25%. And we had also been more competitive by this reduction of repo rates.
So what is your cost of funds expected to be? And therefore, is there a change to the NIM guidance of 3.3%?
I think 3.3 is it's a good figure to achieve. And since we are supporting the state government, we will slightly reduce the rate of interest for the states to support them in their projects.
So cost of funds comes down and the interest rate for you.
All right. Yeah. Since you're in a mood to give us all these numbers and outlook, etc., you've always been fairly candid and clear on your growth path. Mr. Kulshrestha, if we consider that you will cross that 1.6 lakh crore AUM by the end of this year and this 20-25% sort of sustained growth stays, then obviously your 3 lakh crore AUM target by FY30 also has to be scaled back, right? You think you can get to that number by FY28, FY29 itself? That's one. And secondly, if you could give us a sense on your mix as well. You wanted urban infra to be about 75% of the AUM. Is that target likely? Where are we right now on that?
Yeah, it is likely because the way the potential in the urban infrastructure is there, I think we are right on the track. And if you see the other than infrastructure, we are only doing the counterpart requirement of the states under PMAY. So most of the loan portfolio will comprise of the urban infrastructure only.
Okay.
And what 3 lakh crore AUM?
Regarding 3 lakh crores AUM, you are right on the number. We have to revisit these numbers maybe in 2027 FY. We had not started revisiting because we have to see the sustenance of our ratios also, like debt equity or capital. All these things needs to be seen. Then only I think the more vital commitments can be made on the numbers.
How much by way of recoveries are you expecting in Q3 and Q4?
We are committed to become a net zero NPA company, and we are taking all sort of efforts to have that kind of number. And in Q2, we had already achieved 0.07% of the NPA, which is, I think, nearing zero only. And because if you see, there are a lot of projects which are into, say, NCLT or DRT, and we are very hopeful. Maybe in Q4, a lot of projects will be maybe resolved, and we will be getting around 200 to 300 crores kind of money out of these projects. But at the same time, we are very, very aggressive towards the resolution of all the proceedings. At the same time, we had revised our one-time settlement policies also, because these loans are way back sanctioned more than 20 years or 30 years. So we want to capitalize all these things so that the energy and the force can be given to the actual business that we are doing.
So net NPA zero by Q4 FY26?
Maybe H1 of 2027.
Got that. Thank you very much, Kulshetra, for joining in. Pleasure interacting with you, and look forward to more conversations. Season's greetings and a very happy New Year to you.
Happy New Year. Thank you so much.
All right, moving on now to the luggage industry. That's in focus following multiple PE-led acquisition of VIP Industries. A note from Elara Capital suggests that the industry is entering a sustained recovery cycle, and the brokerage is optimistic on the prospects of listed players. Mangalam has moved over to the big wall with the details.
Well, VIP Industries was definitely the stock on our radar all of Wednesday and now as we speak, as well as the much spoken about and much discussed transaction with multiples has completed, where the promoters have transferred 32% of their 52% equity to multiples, and the last tranche of that transaction was completed on Wednesday itself. Now, if you look at the luggage industry, VIP, which was once the hallmark, going forward, there are brokerage notes which came by earlier this month itself. Elara, for one, believes that this industry is entering a sustained recovery cycle. It is a quasi-play to the travel and tourism industry for the country as well, likely to grow at a 12% CAGR and be nearly a 36,000 crore industry by FY28. And that's not all. The branded penetration, which stands at around 54%, because of the changes in GST and increased consumer preferences, likely to go to about 60% as well. So far, the industry, has been led by functionality-led demand, fueling both affordable and premium segments, hard luggage, designer luggage, and luggage, which has now become more of a form of expression rather than just a utility, is moving, leading the industry to move towards high competition. Back in the day, this industry was, led by a lot of these large players, the likes of VIP, Samsonite and Safari, and then digital native brands, private labels, D2C entrants, all of them have begun to expand aggressively. So the industry, which was earlier in oligopoly, has now moved towards perfect competition. However, there's a catch here. D2C players are constrained by offline reach and high customer acquisition costs, so profitability might be a little difficult for them, and that makes Safari and VIP Industries a well-placed bet to benefit from all of these moves in the industry, and that's exactly what Elara expects as well. But if you look at the last 5 years sales CAGR, VIP has grown at just 5%, and Safari has grown at 21% sales CAGR over the last 5 years, and that's not all. 5 years ago, the market cap of Safari was 1/4 of VIP, and now it's double of VIP, because VIP has done virtually nothing for investors over the last 5 years. Safari's earnings per share has compounded at around 35% as well, and VIP Industries, on the other hand, while the revenues did not grow, the losses expanded. FY25 losses were 69 crores. First half of this year, a kitchen sinking, first half, where they've made losses of almost 156 crores. So what now from here on? Elara believes that the company is in repair and stabilization mode. Post multiples acquisition, there'll be sharper governance and focus. Obviously, improvement in margins, increased market share and execution is something on which the recovery for VIP hinges. Turnaround trajectory offers a re-rating potential for the stock after it having done nothing for the last 5 years. Risk reward is now favorable. They have a target price of 430 on the stock, valuing it at 26 times FY28 earnings. But remember, all of that has key risks. The key risks: intensifying competition, sharp rise in input price, and failure in identifying change in demand. So those are a bunch of things that we'll be watching out for India's luggage industry. Will it actually take off just the way the travel and tourist industry has taken off?
Well, thank you for explaining that so beautifully. We'll see whether 2026 is the year for luggage makers. But at least the day, 26th of December, is not too much for the markets. Markets are pretty much unchanged, very quiet, range-bound session of consolidation in a holiday-thin trade. Siddharth Rai Mangla of Stockbox Technologies is now with us on the show. Siddharth, morning. Thank you for joining in. How are you approaching trade? Is there any trades, any stocks that you are advocating?
Hi, Rima. Good morning, and thank you for having me on the show, first of all. And also, seasons and New Year's greetings to you people as well. So, see, Rima, if we talk about Nifty, there are two things. First of all, the overall structure in Nifty, Rima, is still looking good. At least as long as we are above 26,000, 25,900, that important support range, the positional view in Nifty should stay bullish. But having said that, just like you said, this is kind of a holiday period for the market. So the volumes in Nifty are lower than usual, which is why we're not getting any clear momentum opportunities in the index. So if somebody has an existing long position in the index, they can definitely keep on holding on to them with stop losses around 25,950, 25,900 in that range. If somebody wants to take a fresh long position, we must be waiting for a while and at least wait for the index to go back about 26,150, that around today's high. So if once Nifty goes back about 26,150, then the momentum will also be on our side. So then a fresh long position in Nifty can be taken. So the structure in Nifty is good, but as of now, it's much better to sit on the sidelines.
All right, much better to sit on the sidelines, perhaps play it via stocks. Then what are the individual stocks that you're backing right now, Siddharth?
Yeah, sure. Hi, Manglam. See, two stocks, both of these we have to buy. The first one is NBCC. See, today's movement in this counter is absolutely very, very amazing. So, the stock has made an open low just where the stock opened today, started running absolutely from those levels. And again, a big breakout is also being given. So NBCC can be bought right now. The spot is around 120.5. We can buy it here. The stop loss will be 119, and our targets being the first target 124 and the second target 126. The second stock is Mazgaon Dock. See, there's been a very strong turnaround in this counter for the past 6-7 sessions, and now in today's sessions there is again a very strong breakout as well. So Mazgaon Dock can also be bought. It's trading around 2610. It's a good thing that the stock has also sustained about 2600. So it can be bought at these levels. The stop loss will be at 2580. And our targets being the first target 2680 and the second target 2700.
Okay. Thank you very much for that. We will slip into a break on that note. On the other side, Lata will focus on what's in store for the Indian economy in 2026. Stay tuned.
Welcome back. Now, the markets, well, largely around that 26,100 mark for the frontline index, the Nifty and the mid-caps jostling for any sort of levels right now or direction. But 2025, as that draws to a close, what's in store for the economy in 2026? Lata Venkatesh here with the key indicators for the economy and an exclusive CNBC TV18 poll on what economists expect in the new year.
The RBI Governor Malhotra recently described India's economy as being in a Goldilocks scenario, where growth is coming in higher than the long-term trend and inflation is lower than the long-term average. For 2026, economists polled by CNBC TV18 expect this Goldilocks scenario to continue, albeit with lesser intensity than in 2025. Our poll shows the economy is expected to grow by 6.8% over 7.5% this year. But this is the average. 50% of the economists had forecasts above 7% for next year, while 50% stood at just 6.5%. The 7% club see growth from rising consumption due to GST and income tax cuts and falling interest rates, and green shoots in capex in sectors like power and real estate. The 6.5% GDP club disagree with the private capex upcycle assumption. They see consumption as good, but not good enough to trigger massive capex. They also see growth slowing due to a weaker pace of government capex and still subdued private capex due to the global uncertainty. Respondents also see India's nominal GDP, that is, output calculated at current prices without adjusting for price rise, at 9.7% next year, far better than the 8.3% this year. But here again, 50% see nominal GDP below 9.5%, which is, compared to previous decade of India's nominal GDP average at over 11%. Now, coming to CPI inflation. The poll sees it rise to 4% next year from the unusually low 1.9% this year. Here again, it's a divided house, with 50% expecting a continued benign 3.8% CPI, while the other half see CPI between 4 and 4.5%. All economists expect consumption to grow better than investment, with public capex slowing and private capex still diffident. The government is expected to reduce its fiscal deficit to 4.3% from 4.4%, in keeping with the long-term promise to lower deficit. But with the presentation of the 16th Finance Commission report, government may start targeting overall debt to GDP rather than fiscal deficit. There will be pressure to bring it down, that is, debt to GDP down towards 80% from around 84% currently. However, of maximum interest is how much money will the centre and states plan to raise via bonds and state development loans. Our poll said this number would be at least 30 trillion rupees, up nearly 8.5% from this year's 27.7 trillion. Demand for government bonds may be much less next year than this asking amount. Hence, most people expect RBI to continue to buy bonds via OMOs or open market operations. Yet, the 10-year yield is seen slightly higher next year than this year. That is, the cost of capital is not falling. Now, the bigger talking point is India's external account. Like this year, the current account deficit will be modest next year as well at 1.06% of GDP. Now, current account refers to imports, exports, remittances, and monthly transfers by Indians living abroad to their families here. Now, here the deficit has lately fallen because of very good services exports, the GCC exports. The worry has been the capital account, with FPIs, that's foreign funds, shipping out $15 billion in 2024 and $17 billion in 2025, making the overall balance of payments negative at $5 billion last year and likely $22 billion this year. India cannot continuously keeping shipping out dollars from our reserves kitty. Our poll says next year the outflows trend will end and we will see an inflow of $7 to $8 billion. Again, this is the average. Many economists see a $20 billion inflow, but some others say continued outflows or a very measly $1 billion inflow. It is these continuous outflows by FPIs and foreign direct investment that pressured the Indian rupee in 2025, making it depreciate nearly 6% versus the dollar. Our poll says economists expect the rupee to end the current year at 90.4 and lose just a nominal 2% next year, that's FY27, to end at 92 rupees per dollar. Finally, here come the googlies. Most of the numbers won't hold if the trade deal is not signed with the US sometime in 2026. In any case, the numbers will need to be tweaked as early in February, when the Ministry of Statistics will reveal a new GDP and CPI series with a fresh base of 2022 and 2024. So all numbers will need to be recast.
All right. Lata, thank you very much for that. On that note, we will slip into a very short break, but we will continue and take forward what Lata had to say, what's in store for the Indian economy in 2026 with HDFC Bank, Sakshi Gupta and Union Bank of India's Kanika Pasricha. Stay tuned.